Alright, what's up everyone? This is scalpingbitcoin.net back with another video, and today I'm going to show you how we use range bound trading conditions, which occur almost all the time. I think it's around 80% of the time, and we are going to look at how it affects every time frame from the monthly down to the 1 minute, my favorite time frame. So let's get started. First we'll draw the range here. This is the first significant pullback after our bull market. Pulled us back to 29k. Ouch, everyone got wrecked. But what happened after that is we traded back up, breached the 50% mark, kind of came down and retested the 25 and shot off to clear the liquidity here at the top of the range. After doing that, we came straight down, broke through the 50%, retested it, and sold off now. If I sort of adjust my settings here on, how do you do that on the computer? We can change our template to the fib thing and get a little bit of a better reading. So you can see this white one is the 50%, the orange ones are the top and bottom, and so forth. So this red one here is basically a 25% of the original range, and you can see this is often acting as support, now looking like resistance. So we're kind of in a no trade zone, so to speak. I think we've already dumped quite far. I would expect that we would somehow reclaim this red line, maybe even retest 29, bounce off. It's possible we could come back into here and sell off. It's possible we could even come back all the way to the top of that range at 64,000. I think that's probably unlikely. I think one of these two plans is what I'm after. I'm really hoping we get back up to the 50k area. I think that would just be hilarious. Get everyone baited in to buy. Probably around here. Everyone's going to be all in, but it's just not going to happen. So that's kind of the high time frame. So I would say right now I'm bearish leaning, but also very bullish leaning. So it's kind of a hard time to have a bias, I think. It's likely to chop around this level and really screw up some traders, I think. So when we're trading support and resistance, we want to keep in mind, these lines it can go up and over, price can keep chopping, and you can lose everything in those times, so you got to be careful. But let's zoom in, let's say to the 1 hour chart, and we can get a better reading of what's going on here in the short term. So what happened is basically we've come down all the way from 20Ks down to the mid 15s back in the beginning of November. And this big move here is what I'm interested in. Okay, so we're going to go in and widen this up a bit. See more detail of what had happened here. Now what I'm looking for is some big volatility, big pullbacks. That's showing me that, the market makers have stepped in, the big boys, so to speak. And you can see here that from this low, we did have a huge reaction. And we pulled back. Let's just extend those to the right. Okay. And to me, that's, you know, when you look at this move here, that's pretty much exactly a 50% retracement, which is a big deal. I think it takes a lot to move the market like that when it's dumping. And so this right here is going to be the range that I want to work in. Okay. So let's see how it's been reacting. Came near to the bottom here. Retested the mid, came back to the bottom. Usually, once I see this combination where we've showed a willingness to go above the mid range, come back to the bottom of the range, I do think that a test of this candle is in order at around 18K. So once we saw that, you know, our bias is leaning towards up, and we want to get probably an entry here, but if not, you know, somewhere here, or maybe on a pullback later on. So price continues to move all through November in that range at the mid, now kind of holding above. And you know what happens is we finally test that. This was the FOMC date, I believe, on Wednesday, and we pumped in the morning and just sold off since then. And so after taking that trade, we're now we sold up here at 18.1. I think a little before, like 18.111. Lucky ones right there. So we bought that bottom of the range back in the middle of November, towards the end of November actually, and we rode that for a 16% move, 17% move. Now we're back below the mid-range, and like I said, in reverse, once I've seen that, once you see this range high hold come back, once it goes below that mid, I think it pulls back and returns again. I think it shows a willingness to continue on towards this level. So I think if we were to see, you know, this occur and then this hold here, to me that's more bullish. I think we just continue on. It doesn't show a willingness to carry through to the other side of the range again. So ultimately I think we're looking for a pullback to this level and a short down to here. That's kind of the plan. Based on that plan, you could start to look for longs if it holds above here, kind of towards here and here. I believe that that's a little risky. Sometimes these things will just go straight through, so I like to wait for a better price and short here. But yeah, because this is scalping, we are going to also be looking for scalps. And this sort of impulsive move down here since FOMC, we haven't really experienced a sharp pullback of any kind. So we're going to have to go even further down and probably analyze what is happening on a where is, I can't ever find the tools on here. I want to analyze this impulse here. So let's go right down to the 1 minute chart. It shows the most data, and we should be able to get far enough back to see that impulse. So we look at this and we see that there is a fairly sharp pullback. Just using this measure tool. The pullback almost comes to the mid-range right here. So I think we can draw a conclusion that this is another range to work in. Just delete that. So you can see it's come back across the mid. It's respected. Kind of holding right below. To me, this looks like a bullish setup. I think we sort of pop here at some point. I think that just based on the price action, it's not willing to go below the mid anymore. And I think, you could get something like this all the way to the, a range extension, which is essentially saying that if this range is here, that's the distance of the range, we can expect this purple line to be exactly one standard deviation of that range, so the same distance on top, taking us to like 17K. This line up here would be another range extension and then another fourth one. Those are all possible targets. And based on the fact that if we go back to the hourly, that would take, us to this mid-range again. We would probably be more likely to just take profits when we get up here. This white line is that mid-range. So, we'll play the volatility if it happens, and I think start to look for shorts at some point, like I said, on the high time frame. But in general, I think using these ranges to work in is really beneficial to start seeing price that way. You can even, do them on a smaller time frame. Obviously, price is fractal, so it's hard to see them at first. Sometimes, you'd see this impulsive leg here and say, let me draw a circle around it. You see that impulsive leg and you might think this is that pullback, but I see it more as this impulsive leg here and then this big pullback. So I'm going to draw the fib here. I say fib, but it's just a range. There's no 61.1111% or whatever it is. It's just simple quarters, halves, and extensions. So if we look here, let's see if I can change this. Nice thick one. If you look here, you can see we made this range. We went straight back up, perfectly tested the red line, which is 25% above the range high. Came back within. You could take scalps like this, not very high risk reward. Here, we hit the mid, and here we crossed over it. But what happened? We just retested it and it went straight to the other side. Here, we crossed back above, retested, crossed back above. I could take a long right here, which is what I did on yesterday night, I guess. Took a long somewhere here because we basically tested the bottom, broke the mid, showing a willingness. Once we hit the red line on this side, sometimes you notice you get a symmetrical hit here. I believe that did happen later in the night. No, sorry. I'm going crazy. I never took this trade. But anyways, you can see we tested here, we crossed the mid, we retested. You could take a long there, which I didn't. It was a different trade on a bigger time frame. And look at this. You just went straight to the other side for a 20%, 0.2% move, not 20%. With 100 times leverage, that's 20%. So that's how I basically use this system. You can see we've tested the red again, the orange again, and broken back down. So it's sort of one of those scenarios where on the low time frame, it's telling me that there's a willingness to go back here. But this is such a small move that when I zoom out a bit, kind of remove that little scalpy play here we have in this range, the big picture is telling me that we've retested, or that we're retesting this top of range line, and after hitting the red, we've never crossed below the mid, back down, showing a willingness to go to the mid 16s. So I think we get an impulsive move here, and that's why I'm going to hold long since yesterday, which should have been not really sure. Anyways, we went long at some point a little bit lower, and we're waiting for higher prices to sell. And ultimately, we want to be sellers in this market. I think we're still going down a bit, and then we should get a bounce soon, hopefully. But anyways, that's my range trading strategy. That's using quarters, halves, basic math to kind of see how price is reacting and where it's willing to go. I believe this video is kind of just one idea of looking at price. I like to combine price, time, diagonal lines, indicators, market structure, fair value gaps. I look at everything. So it's important that you do too, I think, if you want to be successful. And yeah, stick around on the channel. We do a lot of scalping, a lot of swing trading, a lot of different cryptos. Comment below which coins you want me to do for the market review, which happens every Sunday. And yeah, good luck out there, guys. This is not financial advice. Bye-bye.